All right.
So,
Well, another episode of WealthLab Strategy Trading. Hey, everyone. I'm here with VK.
hi, Dion, and excited to be back on the show. Thanks.
Yeah,
So,
we were just discussing, Volker and I were just discussing AI and how we might be using AI in the markets. And we developed a deep learning model using our WealthLab deep learning extension. So that was kind of interesting. But I think today we have one more strategy to cover in my meta strategy. I guess let's take a look at how our latest performance is doing here, first of all,
yeah.
with this little rally we've been getting in the market. Let's run our meta strategy and
And I
see.
wonder if I'm still in my 6 weeks prediction. Didn't
Hmm.
I predict? You gotta go back and watch the video where I said in 6 weeks. Was that in the video?
Yeah.
Uh,
Yeah. You said 6 weeks. Has it been 6 weeks? I'm not sure, but yeah, we're not actually out of the drawdown yet. I mean, we're still in about a 2.5% drawdown in the strategy, whereas the benchmark is in an 8.5% drawdown. So we're, getting close to climbing out of it. It's much better than it was here at 10%. So yeah, we've clawed back some of those losses and hoping to get out of the drawdown soon. But let's take a look at our periodic returns. So here we had the month of March where this bear market happened, and April was a good rebound month. And here we're in the beginning of May. So we'll see how May goes. They say sell in May and go away. Is that going to be the case this year? I wonder.
yeah, I've tested that one, and kind of is true. There's some kind of reality to it. But I think this is for the general market and less for strategies. That's because if you look at strategies, this rule doesn't apply. So at least I couldn't find any.
Okay, well, that's interesting to keep in mind as we continue our strategy development here. So, one thing I wanted to talk about were the pitfalls of this kind of approach. I ran into a few pitfalls that I want to talk about today. One of them is kind of feeling overwhelmed when the market is tanking and all of these strategies are continuing to throw out buy signals. So when the market is going down, 5% a day, and you're getting a plethora of buy signals, it can feel difficult to take those signals. And then you wind up actually getting fully exposed, and then you can't take the signals. So that's kind of one thing I felt like during this downturn. It's psychologically difficult to sometimes follow the system at that point. I think you even wrote a blog post about that we're going to be publishing.
Yeah, I actually did because I know how it feels and how difficult it is, and I think I wrote a little bit something up that everyone can think about. And even though if you read it and you know it'll still be difficult the next time it happens. So, and we talked to Rob. We talked about it yesterday, I think, in a team meeting. And Robert said he didn't even place the orders on C2, which would have been his best trading opportunities, but he was overriding his own strategy. So it is difficult. Even if you have a strategy, it's difficult to stick with it.
Another
Absolutely.
pitfall I ran into is a couple of the strategies. We have the 1% a week, and we have this TQQQ gap buy require you to monitor the open price and then enter your orders after the open. With TQQQ gap buy, especially, there were a couple of entries that I missed because I wasn't paying close enough attention. So with these two strategies, you really have to pay attention. And I missed actually a couple of profitable trades on the Alpaca account and my live account because I didn't place those orders. So that's another thing to keep in mind with some of these. I'm going to open up TQQ Gap Buy and run it and show you the last trade that I actually did capture. It was this one right here when TQQQ gapped down at the open just a couple of days ago, and then it nicely recovered. And then look at where the strategy exited. This was a 12% trade that I did get in my live account and in the Alpaca account because I was on top of things and I basically ran my meta strategy shortly after the open, which I'm going to do now whenever I see like a big gap down. And then I saw the signal and I placed the order and I got this trade. So yeah, that was a nice outcome there.
So Dion, just real quick, I forgot. So you're buying every gap or just is there some other criteria?
The gap has to be a certain size at open, but yeah, every
Hmm.
gap that's larger than a certain threshold, it will buy.
Yeah, because I remember about 30 or 40 years ago, I had a gap buy system on the German DAX, I think, or the Bund, and you bought at the gap down, and but I closed. Maybe something you want to test. So if it gaps down and close, it was on futures, and close at the previous day low. Obviously, on futures, your profit will be much higher. You're just like I think 10 points was like I think €250 or something. So that was maybe something we can test next time because I think that was interesting. It was a quick in and out if it
Well, I
ever
mean,
closed.
if you mock up the strategy or just send me the rules, I can mock it up and we can test it next week.
Yep, yeah, I'll do.
But
I'll do.
I wanted to mention the IBS system because your IBS system has an entry. Let's run that one real quick. So I run it on QLD, and here's the signal. We got a buy order today, and let's see. Let me take a look at how QLD is currently doing. So I mean,
Well, okay.
it's currently up from the order, but yeah, we got our buy even though QLD gapped up yesterday. It did close at the bottom of the range, so your IBS issued a buy signal. So and
Yeah,
you did mention that you had a variation of the IBS.
yeah. There's a
Should
there's
we
there's a couple of
kind of play around
variations.
with your variation? I mean, the one that we're using here, I mean, it's very simple. It enters when there's a cross under 13 and exits when there's a cross over 95.
Okay, both numbers are not my original system, I can tell you.
All right.
Mine is
Well,
definitely if it's below 10 and above 90.
so
So
let's run it. Let's see if these numbers result in a greater than a 32% annualized on QLD. You ready?
ready, yeah, yeah,
Uh, 21%. So
yeah.
I don't think I'm going to go with your revision here. I'm going to keep it
See,
as it was.
okay, you see, the thing is, usually when I do strategies like that, I do optimize it afterwards. But at first, this is proof of concept kind of, 10
Hmm.
here, 10 there. And I don't want to go too deep into optimizing, but and maybe this is a little bit.
Well, no,
So
I didn't optimize this. This is just the one you gave me. So you must have
okay,
had those
maybe
numbers at some point.
yeah. I mean, I have so many variations of it, and I mean, this looks much better. And since it's around for so long, it seems to continue. I mean, if I look at it right now, between 2000, yeah, it probably is in 2022 something. market going down, the IBS is still going up. It's one of my favorite strategies because it's so simple and um, you can play around with the variations, just like I saw just now that I think the close was actually above yesterday's close looked like it was above yet previous day high, which
It
would
was, yeah.
yeah, which would make me, I'm not saying I would probably test it and just isolate something like this, whether if it opens above everything else that is on the left and then it closed down and it's still above the high, is that a good sign or a bad sign? You know,
Yeah.
that's the kind of thing. I can't remember that I've seen that situation,
Hmm.
but with this volatile market, it probably happened maybe 5 or 8 times in the last 20 years. So what happened afterwards? Was that a good sign or bad sign? So far,
Well,
it seems to be a good sign.
that's the kind of thing you can test in WealthLab easily. But
Yeah.
I guess let's talk about the last remaining strategy in the meta strategy. So it is actually one that I generated using the tool called the Strategy Genetic Evolver. So this is a strategy that I generated on TQQQ, and it had promising results. So I included it in the meta strategy with the 5% of equity allocation. But I consider it one of the pitfalls actually because it does something that I generally don't like to do in a strategy. It only exits at a profit target. So I would always recommend against that. Although I did just include this as a kind of a test of this concept of including strategies from the evolver. So you can see here it's using a couple of indicators, this SMMA, smooth moving average. So it's an exponentially smooth moving average. So the high crosses over its exponentially smooth moving average. And then it's
Mm.
buying at the close and then it's selling at a profit target if the close is greater than the high of 4 bars ago. So that's what the evolver came up with. And we can run it on TQQQ. Let's give it 100% of equity for the sake of this run here, and we'll run it on all data. And let's take a look at the results. So we have a total of 42 trades, 41 winning trades, and one losing trade. So we have a current losing trade. That's why I consider this one kind of a failure, because even though throughout the history it had all of these consecutive winners, all it took is this one stubborn losing trade to bring the whole equity, all the way back down to like a drawdown of over 50% on this strategy. So that's why, I mean, you have to be careful. I would say, don't use strategies that assume the market is always going to go up and you're going to be able to, exit at your profit target. You should always have like some other, kind of logical exit in mind.
Yeah, yeah, I think that's it looks like an over optimized. And I was thinking maybe if you just use if the close is higher than the 4-day high or the highest high 4 bars ago or something. I don't know. I mean, it'll definitely mix up the results because
Yeah.
this one is waiting for the 10%.
Yep.
So
At this point, this one is just like a small position that's will just keep being held. It'll probably turn into a long-term capital gain. I mean, I think the
mm,
market will eventually, hit the profit target of this. And since I only allocate 5% of the total capital to this strategy, it's not a major loss. So it's just something that's now, kind of sitting in the portfolio, just basically waiting for its, due date.
Yeah, I think that's a very good point about the position size. Using 5% of the overall capital. So even if you lose half of it, let's say just half of it, you lost 2.5% of your overall capital, which you can take as long as everything else is actually going up or is recovering earlier.
Yep.
So yeah, you probably see it coming back in the next, well, maybe this year, being profitable.
We'll
So that's
see.
my guess.
Yeah, I mean, if we get a recession, the market may not, reach new highs, very soon, but eventually it will, but yeah, that's the kind of the things to be careful of, I think, this week. And speaking of the first pitfall of having heavy declines and all of these, buy orders, I was thinking maybe next week I'll focus on the idea of should you reduce the position size when volatility is very high.
Interesting. Will
Yeah.
you test it before?
Well, yeah, I plan on creating a position sizer, especially for this, that I'll put on the Patreon, and we'll go over the results. We'll make it available, and then the people will be able to try it out for themselves. But we'll make an assessment of whether it's a improvement or whether it's something we want to actually go with going forward. But it'll be interesting to test.
Yeah, definitely. Sounds cool.
All right. Well, I guess that's it for this week, unless you had anything else you wanted to mention.
No, not for now.
All right, then. Thanks for
Good.
watching, everyone.
Thanks for being here.
Yep. See you all in the Wealth Hub forums. Bye.
Bye.